Hi, it's great to be here at Indoor AgCon. I'm Eric Stein. I'm the Executive Director of the Center of Excellence for Indoor Agriculture, and I'm also in the business faculty at Penn State. I'd like to talk to you today about why indoor farms succeed. First off, I want to thank Indoor AgCon for organizing this conference. I want to thank Robert for putting together this panel, and my fellow panelists Rick and Brandon for some lively discussions preceding the conference. I'd like to talk about the following topics. First, the business model of an indoor farm. And then second, what are the three critical success factors? The first one is managing cost and value. The second is cost accounting metrics. And the third is extending the value chain. To begin, what is a business model? Simply put, a business model is a mechanism for converting labor, capital, energy, materials, and other resources into profits. The business model of a company can be written as profits equals revenues minus costs. It also can be written as profits equals Q times the quantity P minus C minus large c. In this case, Q is your market share, or the amount that you have sold. P is the price of a product, C is your variable unit cost, and large C is your fixed or overhead cost. Let's look at our first critical success factor, managing cost and value. Well, the first ones to look at are energy and labor. These are going to account for up to 80% of your overall variable cost because of the lighting, the HVAC, and other equipment use. The labor, of course, for production and O&M are going to account for the other significant portion of cost in this category. These should be measured in dollars per foot squared and dollars per pound of yield. Packaging can also be a significant variable cost. When we come to fixed cost, distribution can be also a significant cost that we need to plan for. And also depreciation. Depreciation is high because CapEx are still very high for indoor farms, on the order of $200 to $300 per foot squared. This contributes to high depreciation and can be a drag on the income statement. Now we look at the revenue side. Well, the main thing is, what is the value proposition? Who are you selling to and why? Now, in terms of price, there's going to be a lot of competition. And not only from other indoor farms, but also from conventionally grown as well as organics. So there are going to be downward price pressures, which means that we have to keep our costs in control. And getting the volume up is also important, provided that we have a healthy spread between P and little c. Large farms especially need to look to make a significant contribution to the overall volume of produce in their particular area. So to sum up, managing cost and value is a significant factor that will spell success or not for an indoor farm. The second critical success factor is implementing cost accounting metrics. If you don't measure it, you're never going to make progress towards your goals. These include design metrics, operations metrics, process metrics, and other metrics. From a design perspective, it's very important that the space is used effectively. We look at space in terms of plants per foot square, but also plants per cubic foot, because we're looking at a three-dimensional volume that we're growing in. And also the grow area to real estate property area is critical. When you get into the operations metrics, all of these, yields, energy, labor, water, materials, and O&M costs, really need to be tracked according to metrics that make sense for the particular metric that you're looking at. So yields, of course, pounds per year, pounds per foot squared, energy, kilowatt hours per pound, kilowatt hours per foot squared. Typically, most of these will be per pound of yield and per foot squared. It's very, very important to track these. From a process perspective, we also need to look at how much time are we spending in each phase, from germination to nursery to maturation. And of course, accounting for shrink per phase is also critical. How much are we losing at each phase? And finally, other metrics. Do we track waste? How many pounds are we losing in the per yield, and how many pounds are being created as waste that need to be recycled or disposed of. And also we can look at more positive factors like jobs created, how many jobs were created for money invested. So again, if you can't measure it, you can't make progress towards your goals. The third critical success factor is to look beyond production in the value chain. The value chain tracks raw inputs to finished goods to point of sale and beyond. Production is a critical part of this process, but not the only one. Equally important is the post-production nexus, where considerable cost and risk lie. It's just as important that we spend as much time as possible figuring out solutions to all of the post-production nexus problems as we do for production itself to be successful. So to summarize, the first critical success factor is to assess the business model in the context of an indoor farm, and then implement cost and value management strategies as indicated. The second critical success factor is to utilize robust cost accounting metrics. The third critical success factor is to look beyond production in the value chain and put emphasis on the post-production nexus. Thank you. I hope these insights will be helpful to you. If you'd like to reach me, I can be found at eStein@ericwstein.com. I also encourage you to visit our website and sign up for our newsletter at indooragcenter.org or follow us on Twitter at IndoorAgCenter. And with that, I'll turn us back to our panel.